All right, welcome back to the channel. My name is Ian Major. I'm an entrepreneur, investor, and all-around raging capitalist. And in today's video, I'm coming at you with a highly topical theme, and that is around some of the price action we've seen over the last 24 hours. Bitcoin is way down, as you may have noticed. And the point of this video, and really all the videos I do, is not to fixate on the day-to-day price movements, but rather use them as examples to hopefully demonstrate broader points and more important points in what this is all about. So in today's video, I'll go into some of the recent price action a little bit. I'll attempt to offer an explanation for why we're seeing what we're seeing, and then ultimately pedal back from that, given that it's really a fool's errand to try and time things and explain highly complex market dynamics. And ultimately, we'll end up with just providing a little bit of historical context, as we always do. And offer up some parting wisdom at the end to hopefully let those of you be calm and not be freaking out at any of what we're seeing. So with that, let's go ahead and jump in. As we can see here, so it's January 11th, 2021. And I pulled these screenshots just a moment ago. And we can see this, chunky red 15% down on over the last 24 hours. So that is a scary number to many. But if we zoom out just a bit to the 1 month view, we can see, what is that, 80+% up. If we zoom out even further to the 3 month view, this drawdown that we're now seeing looks more and more like a blip. And even more so as we zoom all the way back to the 1 year view. Another great way I like to look at this is in the context of the 4-year Bitcoin halving cycle. If you haven't checked out my prior videos, be sure to go and do that, where I at least scratch the surface on how that works and how some of these swings are predictable. And it's this kind of cartoon version of it. So what we're looking at is the price of Bitcoin in US dollars over time. This would look the same really in any fiat currency. And the point here is that if we look in the middle of the graph, or middle-ish, around 2017, so this big run up in 2017, this made what was a similarly huge run up, at least relative on a relative basis, in 2013 look like a complete blip, right? And so if, prior cycles bear out in this current one, and many could argue that there's way more macro pieces in place to support an even more extraordinary cycle this time around, the point is that what we'll see later in 2021, maybe even early 2022, will dwarf 2017's run up in the same way as 2017 dwarfed the 2013 run up. So again, all trying to put this, in a bit of context. Now, we can attempt, because it's fun to do so, we can attempt to explain what happened. And you'll see a couple articles coming out here around this, coincidental movement of the US dollar. And this is a good point. This is an article from CoinDesk just today, and they're showing these couple of charts. On the left, you've got the price of Bitcoin in US dollars. On the right, you've got the dollar index. So this is basically the US dollar versus a basket of currencies. And you can see these different markers across time. And the conclusion here is that these are highly inversely correlated. And that should make sense to folks, right? Given the whole value proposition of Bitcoin as an absolutely scarce, censorship resistant monetary technology, it is essentially a complete departure from the fiat that we see crumbling around us. And so naturally these things are going to move in opposite directions of each other. And so my hypothesis here is that over the holidays, you probably had a lot of people, being with family and whatnot. If they're anything like my family, they would have heard me talk nonstop about the merits of Bitcoin, and many of them probably would have bought, right? throw a little bit of money in. Okay, I'll play ball. And then when we see a little bit of a sell-off by virtue of this opposite move in the dollar, these weak hands that just came into the game, panic sell, and that is a spiral effect. And so once, the one part of the world is finished and goes to bed, another part of the world wakes up, sees this, oh my gosh, presses sell. And so this can naturally lead to really big sell-offs, such as what we saw today. Just as a little bit of further context, well, why is this the case? Why did the dollar suddenly kind of bump up? Is this suddenly the start of a very different trend? And the answer is we've seen the 10-year Treasury yield pop up a little bit. And so this is the rate that you would earn if you're holding a 10-year Treasury bond. And this makes sense, right? If I'm holding a currency of a nation whose interest rates are higher, where I can earn more interest on whatever instrument I'm holding within that nation, those things generally go together, right? So yields increasing are generally bullish for the associated currency. And you may then ask the next question of, well, why are Treasury yields up? And it's really playing into this story. The market perhaps thinks that economic recovery is imminent, given some of the vaccine news. You have the blue sweep in the U.S., so Democrats winning the Senate, and so there will definitely now be lots of spending, lots of infrastructure spending, lots of stimulus and all of this, and so you have folks kind of selling the long end of the yield curve in terms of the bond market, and you also see higher inflation expectations. And so if inflation's going up, interest rates, there's going to be a lot of upward pressure. And again, if you're not following my other videos, go back and watch my video on this inflation versus deflation debate. It's really, really interesting, and we're seeing that already start to play out. So in summary, higher inflation expectations, some anticipation of an economic recovery, although again, that's really, I think, a bet at this point that the market is making. That has increased 10-year Treasury yields, which in turn has buoyed the dollar a bit, which in turn, kind of put a little bit of pressure on Bitcoin, which in turn made all these weak hands kind of panic sell when they saw something start to turn down. This is one explanation, right? And I go through that just because I think it's interesting. I think it is instructive to try and learn how these different pieces play together. But at the end of the day, we're kidding ourselves if we think that we can truly explain the machinations of a highly complex market system and all the different participants and all their different motivations, right? It's sort of a fool's errand, particularly in a parabolic market such as the one that we're in with Bitcoin. Right, and so another bit of historical context is this good tweet today from Preston, and he's just kind of given some context in the last big run up in 2017 during the bull run then, and you saw these like just wild swings, 30%, 24%, negative 38%, all in the span of a couple days, and so these tend to be really choppy. And so there's very much a precedent here for what we're seeing. And so it kind of begs the question: why do we get so caught up in watching the price and this and that? And one of the big kind of mental habits I'm trying to break is just that, and really focus more on how many sats do you have, how big is your stack, and just keep stacking sats and adding to your stack. That is way more important than kind of tracking the price movement on a day-to-day basis, denominated in any kind of fiat currency, right? That being said, it's highly understandable. We're all human. We have strong risk aversion. And this article that I'll link goes into a number of kind of common investor mistakes. which it summarizes here, overconfidence, fear of kind of regret, fear of missing out. FOMO is such a big deal. Cognitive dissonance, anchoring. So whereas we were just at 40% and 40K, price of Bitcoin, and then suddenly we're at 36, and then people look at that and they suddenly panic and, they sell more. And so there's so many psychological reasons that play into how we, very viscerally feel when our wealth is increasing or decreasing, or when our physical health is increasing or decreasing, et cetera, et cetera. And so, this is all pretty interesting, and I think it all comes back to the kind of parting wisdom that I will leave you with, which is stay humble, stack sats. It really is as simple as that. We have to ask ourselves, has the fundamental value proposition of Bitcoin changed in any sort of way? The answer is no, right? And so it's noise. Sats are on sale today. I bought some, and I'm pretty happy about that. And so I hope this at least provides some perspective, some context on why we shouldn't be alarmed. And instead, we should treat this as a nice buying opportunity and continue to hodl. So I'm gonna leave this video there. If you like this, give it a like, subscribe. There's lots more content coming. I'm really excited to continue the journey of 2021 with you guys. And until next time, every bit counts, and I'll see you then.